Hey, it's Vinny. Today we're going to be talking about a company called Symbotic, which is a very interesting investment opportunity. So Rick Cohen was the founder. His Symbotic expands deal to automate Walmart's warehouses to all 42 regional distribution centers. So Symbotic originally had a deal that they were going to retrofit 25 of Walmart's regional distribution centers. And Walmart is so confident in this company that they've expanded the deal to have them automate all 42 of their regional distribution centers. Walmart really believes in this company. So the way Symbotic got started is really interesting. It was founded by Rick Cohen, who was actually the owner and executive chairman of C&S Wholesale Grocers, the nation's largest grocery wholesaler with over $25 billion in revenue. Cohen started Symbotic 15 years ago to build automation that could help his own logistics issues at C&S, funding it with his own cash. So he saw a need. He was already in this industry and wanted to maximize his warehouse's efficiency, and that's how Symbotic was born. The scale of Symbotic's automation is hard to grasp. In a large-scale warehouse, more than 400 of Symbotic's autonomous robots, or even potentially more than 1,000, could zip up and down 10 levels of narrow aisles, completing more than 30 transactions per hour. It's a big Rubik's Cube, a big Tetris game is what we call it, Cohen had said. It's the miniaturization of the warehouse. The expanded Walmart deal comes as warehouse logistics have been in the spotlight as consumers demand ever faster shipments of e-commerce orders, and stores too need speed and reliability to stock their shelves. Symbotic's ability to build palletized loads of sorted inventory can help Walmart get products to its more than 4,700 stores quicker. Joe Metzger, Executive Vice President of Supply Chain Operations at Walmart, has called the Symbotic technology a game changer. So it's going to take some time for them to, build out the system in all Walmart's 42 distribution centers, and they're estimating it's going to take more than 8 years. But the fact that the deal is there, there's clearly demand for this product. Now, Symbotic stock, it went public via a SPAC at around $10 a share, and it went as high as $28 at one point. My average cost is $10.05, so I'm currently up a little over 40%. It's currently sitting at $14.38 a share, and my plan, I just plan to continue loading up on more shares as it gets to the low teens or as close to that $10 listing price as possible. It has been volatile with the broader market and obviously the whole process of going public as a SPAC, but there's a lot of other things to be excited with this company that we're going to take a look at next. So the fact that Walmart, originally the plan was for them to implement the technology in 25 of their regional distribution centers, and they've already expanded the commitment to all 42 of Walmart's regional distribution centers. It shows you, Walmart is not playing around. They have a need for this, and they want to get Symbotic in all 42 of their warehouses. So Symbotic is no startup. It's an established company that brings 15 plus years of experience to the table. They're working with Walmart, Albertsons, C&S Wholesale Grocers, and we'll take a look. They have a much larger total addressable market that they want to break into. So they basically invented this system that uses autonomous vehicles and AI, robotics that make distribution centers much more efficient. There's clearly going to be a lot of demand for this type of technology. SoftBank and Walmart are investors, and they're also partners, so they're going to bring a lot of expertise that will help take this company forward. Revenue is growing 70%. They have $11 billion in confirmed revenue orders. And, Symbotic is solving a huge problem. So one distribution center typically handles something like 6 terabytes of data daily, and Symbotic is the only company employing autonomous vehicle and sophisticated software to solve the problem. So Michael Loparco, the new CEO of Symbotic, said that Symbotic transforms the supply chain with automation and intelligence so that our customers' warehouse distribution networks become a competitive advantage. So if we take a look at some slides from their management presentation here, obviously there's a lot of limitations with manually operated distribution centers. You've got high operating costs, multiple touches, a higher damage rate, inaccuracy, and risk of injuries. You've also got lots of union pushes, which push into the profit margins that are already razor thin when you're looking at things like supermarket chains. So Symbotic can really make a big difference here. They've got a great founder-led team, and while they have hired a new CEO, Michael Loparco, who they think is going to be able to greatly scale the business. Cohen is still on board. I believe he's the Chief Product Officer is his official title now. This presentation is from 2021. But he's definitely highly involved in the company. They're looking to vastly scale this company. So Symbotic has a deep competitive moat. They've filed for 450 plus patents. They've been issued 276 and have an additional 142 patents pending. Symbotic brings multiple benefits. inventory reduction and cost savings, improved throughput efficiency. They can retrofit into existing facilities, increase storage density, and perform these tasks with superior accuracy. And, it's been validated by multiple industry leaders. So obviously CNS Wholesale Grocers, they're the largest US wholesale grocery distributor. They were the initial adopter. They've also got Albertsons Companies, which is the world's third largest supermarket chain by revenue. And of course, Walmart, the world's largest company by revenue, are all utilizing Symbotic. So there's a lot of benefits that arise from the Symbotic system. You get a very good return on your investment. You can dramatically lower operating costs, 5 to 9x improvement in outbound efficiency. It can perform tasks with an accuracy of 99.9%. It can increase pallet capacity. So you might have noticed in the video, the one segment, they're able to stack pallets much higher than, a human operator will be able to, which can lead to lower transport costs. You're able to maximize your space, really stack the pallets to the perfect size for transport. And it's estimated that over a lifetime savings of using the product, you could save $250 million, which again, when we're looking, big companies like Walmart are always looking to improve efficiency because then they can get higher profit margins. But it's even more crucial for those smaller chains or, grocery stores that typically don't have very high profit margins to begin with. Anywhere you can shave off some expenses and increase your profits, it will definitely go a long way. So they've got 3 strategically addressed markets: the U.S. general merchandise, ambient food and grocery and apparel. Then they've got consumer packaged goods, home improvement, auto parts, and then they've got the remaining U.S. verticals, and they can also expand into Canada and Europe. Their long-term growth strategy makes a lot of sense. Obviously increase existing customer penetration. Walmart, they already succeeded with that, going from 25 to 42 warehouses. They're going to try and win new customers as well as enter new verticals, add new geographies, and then expand their product suite. So the roadmap sounds great. Now they're anticipating a hyper growth, 86% compound annual growth rate up until 2025. They've got a $5 billion plus contracted backlog. I believe it's more like $10 billion now. Again, this presentation's from last year. Shooting for 25% EBITDA margin as the business scales. So obviously, profit margins are going to be low. This company is not yet profitable yet, as they are early on in the scaling phase. But the idea is, by 2025, the end of 2025, when they have scaled up, they should be profitable is the hope. And they've got a CapEx light business, which leads to significant projected free cash flow by the end of 2025. So sample contract summary, you get the Symbotic system, but then there's also an annual software subscription service, so they can get some recurring revenue going from that. But the majority of their revenue is coming from, the Symbotic system itself. So they are losing money, as you can see. This is for 2021. They brought in more revenue than they had planned, between 240 and 250 million, and their gross profit not that high, only 3 to 4% of revenue. But again, they're in the scaling phase. That's going to come down the line. And they did release a Q2 earnings, which maybe we'll follow up with a second video. We could discuss that. But they are losing money, as you can see. While they are losing money right now, they do have a huge backlog and they're in the scaling phase. And it seems clear, if Walmart is on board with it, many others who try to compete with Walmart are probably going to follow suit. Symbotic's technology is paradigm shifting. Some technologies disrupt entire industries and have substantial total addressable markets. Others automate manual processing using AI. So UiPath is actually a company that does something similar to Symbotic, but it's more software based, whereas Symbotic brings in the physical robotics as well. Others serve as commerce-enabling technology platforms. Symbotic does all 3 of these things. So with Symbotic, you get a complete system to automate the supply chain with AI-enabled automation and integrated omnichannel, highly visible growth profile underpinned by $5 billion plus of a contracted pipeline with large blue-chip customers, and an extensive runway ahead to transform $1 trillion of market spend. So let me know what you guys think in the comments below. I think that this Walmart partnership is a huge deal. It works to validate Symbotic's technology, and where Walmart goes, a lot of other retailers are sure to follow. So if you enjoyed the video, don't forget to like, subscribe, and drop me a comment below. This is Vinny from the Investment Club, and I'll see you next time.